Not-for-profit entities have to start reviewing their grant agreements and other funding agreements. In particular, they have to look at whether these agreements contain sufficiently specific performance obligations. We know that sufficiently specific performance obligations is a very important hurdle to pass in order to apply AASB 15. If these agreements do not contain sufficiently specific performance obligations, the not-for-profit entity will have to apply AASB 1058, which would most often lead to the recognition of income on the day that they receive the cash. So sufficiently specific performance obligations is a new term in the accounting literature in Australia and subject to judgment. In this article, we provide some guidance on thinking about sufficiently specific performance obligations and how not-for-profit entities could apply their judgment. In the framework that we discuss, we try and address what's the difference between internal activities, external outputs, and outcomes. Quite often, agreements only include internal activities. Other times, these agreements only include outcomes. However, in order to have sufficiently specific performance obligations, we would like outputs. Outputs where we can clearly see how the not-for-profit entity have an obligation to transfer goods or services to their customers. We hope you find this framework useful and beneficial.